All right, let's answer some of your questions now. Shannon gets the first one today from Ralph in San Diego, California. Your thoughts on Pfizer or what?
Well, I think that going into this is probably a hold here if you already own it. I wouldn't buy it here. I think that if you're looking at healthcare, I would stay, as much as I like healthcare and the opportunities here, I think it's a little early on big pharma. I'd look elsewhere or into businesses that are more diversified than just pharma.
Okay, Jenny, for you from Bretton, Wisconsin, is the worst over for Six Flags? And can they sustain their current dividend yield?
Sure.
It's a good question, and they do have a big yield, better than 8%.
Right, and those are two super different questions, right? So first on the dividend, well, first things, a couple weeks ago, they pre-announced. I've spoken to the company a couple times since. Michael Spenas is the new CEO, and his first real debut with investors is going to be on the earnings call, which is scheduled for February 20th. I think there's a reasonable chance that they do cut the dividend, because right now the dividend's $3.32, and they're only earning about $3 a share. If they do, they might cut it in half, and then you still have a 4.5% yield, which is attractive. Beyond that, and this is the bigger part of why the worst might be over and you want to own it, is they've got $3 a share of earnings, $3 a share of free cash flow, and it's really cheap. So there's a lot of capital appreciation potential.
But we're going to do a little reporting here, maybe. You've spoken to the company and you think they might cut the dividend?
They cannot say and they won't say, so that's me purely doing my math on that. Saying, the earnings don't cover the dividend.
But even if they cut the dividend, you're suggesting that
I think the stock could be okay.
It wouldn't go down.
See, it went down a tremendous amount when they pre-announced a couple weeks ago, and the pre-announcement didn't justify the move in the share price. So what I think it was people just fully anticipating at that point a cut in the dividend. So I think that the cut in the dividend, if it comes, is paid forward at this point. Or maybe they keep it and use cash flow to float it forward until the future and they catch up.
Okay, good stuff. Jimmy from Keith in Ohio, I bought Greenbrier. It's fallen 5% in no time at all. Is this something you're still high on, or should I get out?
Yes, I'm still high on it, Keith. Hang in there, all right? Just look, this coronavirus has obfuscated what's going on in terms of CapEx, rail car loadings, and basically manufacturing PMIs everywhere in the world except the U.S. have started to tick up. The U.S. is about to follow, and with that, rail car loadings go up and revenues for Greenbrier. Stick with it.
All right. Joey, for you from Allen in Boston, I have a holding in MasterCard since its IPO. That's back in 06.
Wow.
Should I continue to hold it or sell?
I should have asked Alan the question
in
06. I don't think we have enough time, but someday I'll tell you my Vonage story about how quickly I got out of MasterCard. It's given you 45% over the last 3 years. It's a card processing duopoly. We know that between Visa and MasterCard. They're going to report next week. Earnings are going to be strong. If you don't get a favorable price reaction, don't panic out of the stock. You've had it since 06. Congrats.